markets is not helping.
All
And the
right.
prospect of the recession that you all
My
have been
friends, good
talking about,
afternoon,
I
good
think
evening,
is a
wherever
clarity
you are.
for
This is
most
Ryan
investors that you
Derks.
need
I
to
have
withstand
another
a big recession.
Derks Financial
So buyers and sellers
clients
are not seeing it the same
portfolio
way.
update.
I
This
think
is
there's
a
a
big
lot of
one. We have
memories and
we've got
nostalgia
the
for
Federal
21 peak
Reserve just
valuations,
came out
which
to give us an
they
update
don't
on
wear
what
off
they
very
think is
quickly.
happening
And so I think it's
in
pretty
the
difficult
economy. And
for buyers and
I think
sellers
the
to get
best
together.
way to
That's the
sum
bad
it
news
up,
for the short term.
let me see if I can pull
But
that
in all
open. The
those
best way to
cycles in the
sum it up
past, it was
is
the second or
this
third year where
comment
the volume
right
really took off.
here.
It's where the credit
Have
market
a look at
stabilized,
this.
where the
Oops.
recession, was behind us.
I think that's the
And I
best way
think
to
in
sum
those
it up right
markets, I
now
think that's where
is
you're going to see, the
uh,
real business really grow and climb
markets are
again.
pumping
And
and
where
they're
do the
dumping.
regional
I
banks
don't even
fit
know,
into
you
that?
guys, you
We're
know
about
that
to
when I'm
get
wearing all these
earnings from
hats
them.
that
I
I
know
can
you
never
talk
actually
to
tell
a
if
lot of bank
I have the right
executives.
window open, and I
Are
didn't that
they
time.
going
So
to
just
have to
go
go
with it.
through a period of
So I have no
pushing
idea.
away
Let's
from the
see. We
table when
should
it
have the
comes to
Fed
lending
Reserve,
to get
one
these
of the Federal
balance sheets
Reserve
shored up?
president,
And how
chairmans,
much
excuse
of an
me, on
impact
here in a minute on
are you
CNBC.
modeling that that's
I'm
going to
going to
have on
mute
the
that for a
economy?
minute until he gets on because I'm not really too concerned on the deal making right now. So, wow. CPI release. What a big deal that was. Let me see if I can actually pull that up the way it was supposed to be. There. That's how how today has been. Stocks are pumping pre-market. Now they're dumping. So we had a lot of stuff going on this morning. The Fed released its monthly inflation data, and this afternoon they released their internal minutes. This was a very unique one because this was right after all those banks started going insolvent a few weeks ago, and now here we are. So this morning, stocks pump because we come in and we say, "Hey, what an amazing turn of events." Let me pull this up here. CPI is not so hot. Now, before I get into this, I'm going to also remind you guys, this is not investment advice. If you guys want investment advice, you got to call me directly, email me, call me, whatever. Also, this is brought to you by Derks Financial. You guys want some help with your IRAs, your 401ks, maybe your company benefits. Maybe you have a business that needs a better bookkeeping payroll team. I've got it all. Got a great team here, and I want to talk to you. So reach out to me. So let's talk about what's going on here. Let's talk about everything that's going on here with inflation with this one thing in the back of your mind. Back at the end of December, they meaning the Fed, changed how they calculate inflation. See this? This is the last 5 years right here of inflation. What they used to do is report over the last 24 months of inflation. And what they did back in December is they said, hey, we're going to change how we report inflation to you people, and none of you are going to know or pay attention. We're going to report the last 12 months. So this is the last 12 months here. This is the last 5 years. So what they should be doing is reporting, okay, from right here, April. They should be reporting how much inflation has increased or decreased on this scale. And you can see it's massive, but they changed it and nobody knows any different. So now it's just on back to April, this scale, which looks far more manageable, right? Far more manageable. So don't forget, this whole thing is a fraud. They're fudging the numbers so that people don't realize what's going on. Let's look at it first before we get to what caused everything to fall apart, which was one of the most shocking things I've seen in a while. Basically, it was the internal minutes of the Federal Reserve central bankers meeting after all these banks collapsed, and they say exactly what you and I have been thinking for a while. Also, one more thing I'll shout out. Don't forget, YouTube, Facebook, Twitter, live. Comment below. I'll chat back and forth with you. Add some insight that you might have. So essentially, you can see here, this is what they reported on. Food is increasing. Energy is slightly decreasing. All items that are not food and energy are increasing, including shelter. Shelter is increasing a lot, 8.2% year over year. And here's the top comment. I love it. Don't forget, they changed the calculations and are still sorry guys, I just freaked out for a second. I thought maybe I forgot to get the audio. Let me just double check my audio is fine. All right, audio is good. They said celebrating this is like celebrating getting beat up slightly less than last month. You're still getting beat up more and more each month. Negative CPI would be prices actually coming down. That's never going to happen. And then the most succinct and awesome reply to that was, the problem is that the masses do not understand what this means. people see 5% and go, oh, it was like 6 or 7% last month, so inflation's going down. Yahoo, good job, government. And then the media plays into it. You guys, we've been talking about this every month for probably 6 months now on this channel, in these videos. The Fed will come out and say, hey, this stuff is unsustainable. We're in a bad way. We're going to raise rates. Don't call our bluff. And then for the next 29 days, the media and whoever else, because the news, they have to have something to talk about for 29 days. They keep putting out this nonsense that gets everybody excited, thinking, hey, things are about to get good again. Things are good. And then, while boom, they act all surprised in 30 days following, when the Fed comes out and says, no, we're raising rates. We told you this is not good. So essentially, you guys, here's this is the minutes. I don't want to go over this just yet. So, so the bottom line of what was released this morning: March CPI shows inflation at 5%. Core CPI inflation 5.6. Again, that is still things overall increasing. We have now seen 23 consecutive months with inflation above 5%. This is the cost of free money and 0% interest rates. That's extremely accurate right there. One other thing I want to show you on this, two very important data points to pull out of this. Zero Hedge says, folks, wage growth, as in actual tracked wages, not that BLS garbage, is in free fall. Quote, growth in after-tax wages and salaries based on Bank of America deposit data slowed to just 2% year over year. So this chart right here on the left is showing actual wage growth or falling. You can see here during the previous president, 2019, 20, it was starting to grow, peaked right there in 21. 22, I should say peaked in 22, and it's just been falling nonstop since then. And you can see the chart on the right. It just breaks it out a little more detailed. It doesn't matter if you're below 50,000 or above 125. Overall, wages are not growing, and inflation is not helping that. So that was this morning, okay, right? That was this morning. Then what happens this afternoon that causes, and let's see how the stock market is doing right now, just as we're all so curious about this. Real quick check-in. Nope, they're still talking about private equity stuff. Okay, so the market is finished the day off pretty poorly, actually. Yeah, pretty bad. Actually, it's not that bad, really. It's basically flat, but it was rocketing in the morning. So, so here's why it fell apart in the afternoon. So this morning, the Fed releases their data of inflation, and in the afternoon, they release their private meeting data, their minutes, as they're called. Now, just 1 second, I'm going to quickly check my streams. Okay, that one looks good. Let me check this one. Okay, that looks good. And let me check this one. Yes. Hey, Shakira, nice to see your face. Yes, life is good. I hope life's good for you. Lorene says Biden is the problem. Lorene, it's not just Biden, it's the people that he surrounds himself with. Don't forget how many thousands of people are in and out of the White House, or the tens of thousands of people that make up all the different agencies around the government. But you know what? I'm right there with you. And Shakira, I hope life is going well for you. Okay, so what caused the market to just completely fall apart? I'll tell you exactly in 2 sentences. First, given their assessment of the potential economic okay, time out. First off, let me build what's going here. This wasn't just some random meeting. These meetings, they released the meetings of the previous month's private Federal Reserve Central Bank meeting. These are the guys that are the last resort. They bail out the economy back in 08. That's who this is, the Federal Reserve. They were having their meeting right in the middle of all of these banks going bankrupt last month. And so it's a very interesting sentiment. What were they thinking? What was going through their mind? What type of things were they saying out loud? This is what they were saying. Given their assessment of the potential economic effects of the recent banking sector developments, the staff projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. Real GDP, so real economic growth in America in 2024, next year, is projected to remain below the staff's estimate of potential growth, and then in 2025 above that. So they're saying behind closed doors that they think the recession is absolutely going to happen. Wait a second. Just yesterday, Janet Yellen told all of us, she's the head of the U.S. Treasury. She used to be the head of the Fed. She just said that she's not anticipating a downturn. So who's lying? Is it the private meeting behind doors, closed doors, where they can talk a little more freely, or is it the head of the U.S. Treasury giving a press conference? Something doesn't add up. Janet Yellen just said this yesterday, where she says, I've not seen enough evidence at this stage suggesting a contraction in credit, although that's a possibility, blah, blah, blah. I believe our banking system remains strong and resilient. It has solid capital and liquidity. So I'm not anticipating a downturn in the economy, although, of course, that remains a risk, she said. Wait a second. Wait just a second. Because not only that, but they also mention here the Fed says, wait a second. The Fed literally said in the minutes that they expect the banking crisis to continue and cause a recession. It says here, fallout from the U.S. banking crisis is likely to tilt the economy into recession later this year, according to the Federal Reserve documents released on Wednesday. Federal Reserve staff gave FOMC members a presentation about potential repercussions from failure of Silicon Valley Bank and other tumult in the financial sector that began in March. Blah, 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 blah. Though the banking sector is sound and resilient, staff economists said the economy will take a hit. I love the top comment here to this whole thing. The guy says, it turns out that these gains in the market were transitory. The real recession is the friends that we made along the way. So again, like, what's going on here? Who's lying? Who's telling the truth? Just another little fun little salt and pepper to add to this whole chaotic mess of global banking and fractional reserve banking and zero interest rates is Warren Buffett actually said this, just what was it, like yesterday or the day before? Warren Buffett, quote, more bank failures are likely, but depositors are safe. I generally agree with that. Depositors will be safe because they'll just print money to save everyone. But even Warren Buffett here says, we are not through with bank failures. Dumb decisions by bank managers shouldn't be panicking the whole citizenry of the United States about something they don't need to be panicked about. So, I mean, honestly, I couldn't agree more. I don't think the banking drama is over. I think you're going to see some more banks go insolvent. I don't know which ones, but I don't think it's over with. But all I know is that you're not getting the truth from almost anyone on any of this kind of stuff right now. So, one other amazing, crazy data point you guys have to see that's come out in the last week or so. This was on this one right here. Twitter thread was really a great Twitter thread. And who in the heck is Catherine Rampell? Syndicated op-ed columnist for the Washington Post, CNN correspondent. Okay, so she's at least somewhat legitimate person on Twitter. She says, "How are banks responding to Silicon Valley Bank's collapse / subsequent deposit outflows?" 3 items. The largest 2-week cutback in bank lending history in the United States. The largest 2-week cutback in bank lending to corporations in U.S. history, and the largest decline in lending to real estate on record. Now, I'm going to do another episode probably tomorrow or Thursday about commercial real estate. That's a big drama right now. People are saying that's about to crash and all that. We'll go into that more detail. But this is a pretty telltale sign. Banks are extremely conservative. And in the last 2 weeks, we've had the largest cutback in individual and corporate lending in U.S. history. She says down below, also relating, Goldman Sachs economic research says smaller and regional banks most likely to tighten credit aggressively, and in over half of U.S. counties, these are the banks that provide 90% of loans to small businesses. So you get this what do they call that? Like a bad to worse to worse to worse, kind of like this whole spiral of yeah, you guys know what I'm talking about. I forget the what that is, but this thing happens, which makes this worse, which then makes this worse, which then makes the bad thing happen even worse, and then if this continues, if a recession is on deck, if the price of housing continues to increase, if banks are becoming even more and more conservative, this thing isn't going to stop. This is not going to stop at all. Even Buffett saying banks are going to keep going under. This is not done at all. So I'm going to finish with this, but let's check to see. Let's check to see here. No, this is not the Federal Reserve chairman yet. Hopefully he'll be on before we hang up this this live stream today. One more time, you guys. My name is Ryan Derks. This is a special live stream for Derks Financial clients. A little portfolio update on the Fed's inflation reports. Feel free to leave comments, Twitter, YouTube, Facebook, live streaming to all those platforms. None of this is investment advice. If you want investment advice, you need to call me directly. Hey, Stephen Walker, Reverend, nice to hear your voice, or I guess see your voice, I should say. Don't really hear you in the comment section, but you know what I mean. Okay. Also, I hope you guys like my audio this time. You remember my audio for the last like 4 videos was terrible? I finally went back to my old setup of my old mixer, which is a huge clunka thing, but you know what? It works. So, okay, finally, just kind of leave it off with this Kobe SE letter. I don't know who this guy is, but I really like his tweets. He says, here's a timeline of the Federal Reserve since 2021, January of 21. Inflation is transitory. Recession definitely won't happen. May of 21, recession's unlikely. December, inflation is not transitory, but recession won't happen. May of 22, recession may be needed to lower inflation. December of 22, disinflation started. Definitely no recession. Now, okay, mild recession later this year. And it looks like he asked this question: is mild recession the new inflation is transitory? The answer, you already know the answer. Of course it is, because they are flying in the face of just standard basic economics. You cannot continue to have zero interest rates. You can't keep bailing out the massive corporate America, whether it's the tech guys, the banks, the pharmaceuticals. But you can't keep playing favorites with these big tech firms, or these big corporate firms, I should say. And then when things go bad in the banking, you can't just bail everybody out. So, yeah, it's going to get a little bit worse. It's not over with. Um, so anyway, that is about it. Let's see. Okay, I guess unfortunately we're going to miss. I think we're going to miss this chairman here on the Fed talking, but that's about all I got for you guys right now. I hope you enjoyed this stuff. Again, let me just give this one last little roundabout overview here. This, my friends, is the last 10 years of inflation in America. You remember back when McDonald's came out with the dollar menu right here and things were a dollar? Yeah, do you know why there's not a dollar? I think it's like iced tea is a dollar. That's the only thing left on the dollar menu. In fact, I think that's like $1.35 now. I don't even know. I don't really go to McDonald's enough. But this is inflation over the last 10 years. This is why everything gets so expensive. This is why your grandpa used to say, oh, I could buy a candy bar for a penny when I was a kid, and now a candy bar is like $4.50. This right here is why. And what's happening, my friends, is that your government is lying to you and lying to me. This is how they should be reporting. This is how they should be reporting the information, but they have changed the way back in December, just 4 months ago, and they said we're no longer going to report on the last 24 months. We're only going to report on the last 12 months. So today, everybody's cheering, saying, Yahoo, inflation's only 5%. Things only got 5% more expensive, which by itself is not true. But secondly, it's even more dishonest because the way that they are calculating it has they've halved it. Instead of going from down here where it should be, they started the ticker, they started the counter up here. So really it should be probably closer to 8 or 9%, to be honest, but it's a very nice little math trick for them. So you guys, that's all I've got for you right now. I just wanted to go over some of these various updates um, in the world of finance and whatnot, and things that we are and are not being told. So until next time, you guys, thank you very much for tuning in. I appreciate you guys so much. It's really fun to get to connect with all of you on this platform. So again, you call me, text me, email me. We'll chat later. Okay. Thanks. See ya.